Good morning, traders. It's 9:20 a.m. on the 29th of November. Really close to the end of the month now, approaching the end of this week, and boy, have the markets been all over the place this week. So, gonna get straight into it. Aussie dollar. So, as you can see, price has actually found support on the exponential moving averages, in line with that 0.7250 weekly support level. But we are just approaching these highs around the previous 2 weeks, which may prove to hold price action. Just have to wait and see. Daily time frame. You can see we were trapped within this range as specified previously, and despite these two upside wick rejections of the 0.7250, which probably caused a lot of traders to go short, I have to admit even my bias was towards the downside at this point. However, we did not get that all important moving average crossover. And what happened yesterday? Well, the Federal Reserve Chair Jerome Powell came out, and in his speech, when he spoke about the current market conditions and the outlook for the future, he actually his tone actually changed from quite a hawkish one, which the Fed have had for the majority of this year, to a more neutral or dovish tone, which obviously sent the US dollar into a nosedive, and this market gained some strength off the back of that. So we had this very strong bullish candle which broke through the 0.7250 resistance, which is now turned to support, as well as the top of that range, and we also had that 0.7300 in line with these highs here and here. So as you can see, price is hesitating somewhat around this high. I do still expect price to push slightly higher towards this highlighted region, but again, we may be seeing a pullback to this moving averages before making another attempt at the upside. So given the level that we are currently at and the choppy behavior of price action, we could see further consolidation within this zone. So on the 8-hour time frame, you can see bullish price action clearly here. We had the moving averages crossing over before this bullish move, and now you can see price responding to this 0% from our upside fib, which, as you can see, we had 1, 2, 3, 4 rejections of this refined Fibonacci region. So now we're just awaiting for price to break through this 0% to extend slightly higher towards a 0.7380. Bit clearer on the 4-hour time frame. You can see price did hesitate slightly at the 0.7300, and we did have these upside wicks, so there is some sensitivity to the upside. So while I look towards this this daily resistance zone and Fibonacci extension, as I say, we do have the potential to consolidate further here. We may be seeing a pullback towards the top of this zone at 0.7280, even potentially down towards a 0.7250 if the dollar can pick up strength again. Onto USDJPY. Now, I did mention the significance of this level, this 113.75 in line with these previous highs. So price has attempted this time and time again, and this week what's happened, we've seen a sharp pullback from this level. Price is still in an uptrend and is still supported by the blue exponential moving average. It's just depending on how we close this week, this what looked to be a morning star formation could be pulling back to invalidate that and head towards a test of this trend line, which is in line with my original analysis. So as you can see, we formed this lower high, formed a higher low, but then now, after breaking back above the moving averages, price failed to successfully break through the 113.75, and we've now formed a new lower high. So we could in fact draw a trend line quite flat, looks something like that, which has us seeing price towards the downside. Currently we're trading around the moving average support. As you can see, price pulling back slightly, just hesitating slightly at that level. But I think 113 targets is a very reasonable level before looking down towards a new lower low at the 112, in line with a test of that uptrend. So in terms of a Fibonacci, I believe I had one on here previously, which looks something like that. I mean, despite this high here, price does appear to be responding to this refined level. So now we could well be looking towards back towards this 112. I mean, in terms of this Fibonacci, that 112 is a conservative target. If you are a bit more of a risky trader, you may even look towards a break of this level, looking down towards the 110.80 region. However, as we are still within this uptrend overall and within this weekly uptrend, we can't call short past this level at the moment. So on the 8-hour time frame, I did say about the potential to move towards a 114. However, I was hesitant about calling longs past that level just because of the accumulation in this region previously. And what happened, we had the Jerome Powell speech yesterday, which saw price spike up towards this level but then sharply reverse, found support on the moving average. However, the bears stayed in control and we had this strong bearish Maribozu, which took us towards a simple moving average. Price has attempted to come back up to retest the exponential moving average. However, we look to have rejected that, and now we're looking at the 113 as initial targets. So overall, the dollar is quite choppy at the moment, so we will be looking to see how price responds at this 113 level, because we could see a higher low to this low and then price return to the 113.75. However, as I say, looking down towards the 112 level. So here on the 4-hour, you can see that we've broken below the moving averages, which have now crossed to the downside. We haven't seen this cross to the downside yet, so as price comes back up to retest this level, then we look to extend further downside. Now, USD CAD, let's take to the weekly time frame. Again, at this all important level here, not much to report back on the weekly, but you'll see how this week has played out as we go down the time frames. So as you can see, price found support on the 1.3250 major key level, in line with the exponential moving average. I specified in my analysis last time just how well the moving averages are holding price up with this pair. So the volatility yesterday caused price to spike to the 1.3350 daily resistance as specified previously, and then we saw price come back down to that 1.3250 major support level. We've pulled back from there, and then today tested it once more, which we appear to be rejecting. So as we look towards the upside, just keep in mind this region around the 1.3300. Obviously you can see how prices responded back here around the 20th, where we sharply reversed, and then again here just yesterday. Although price spiked higher to form a higher high to this high, we did actually close below this high. So it does lead us to think that there is the possibility for further consolidation within this region, and potentially even rolling over to the downside. Whilst we remain and continue to reject this 1.3250 major support, then I wouldn't feel comfortable calling short positions, just because we are in this overall uptrend. So despite the speech yesterday, which sent the dollar downside, this market has been somewhat hedged by lower oil prices. So as you can see here, we did fall back to this weekly support level. However, I'd say the losses incurred in this market are somewhat less than, say, USDJPY, for example. So if we take a look at the crude oil chart, we can see that oil continues to trend downwards, and we've now just slipped below that $50 per barrel level. So there is the potential to continue downside here. Depending on how the dollar responds, we may see further consolidation as specified, or potentially even upside here. So not all hope is lost for the dollar, with trade tariff discussions due to take place tomorrow after the G20 meeting. Then we could see further volatility in the markets. Currently just sitting around that all important moving average support here. Again, on the 4-hour time frame, we're just trapped between those moving averages. We had this long wick rejection from the 1.3250 weekly support, but then price is just consolidating within this region. So overall, I do think price can pull back up to the 1.3350. However, the market is indecisive, looking towards tomorrow for a bit more clarity. Now GBPUSD, we remain supported on that 1.2750 weekly support level. My doubts remain about the pound, despite certain news coming out that Theresa May might have a small amount of backing in Parliament surrounding the Brexit deal. Nonetheless, we've got to wait to see what the actual news is, not just the rumours. So we're quite a way away from that. So the market remains in this consolidation region. I did specify that this 1.2750 weekly support was likely to hold, just given the significance of the level, and the volatility brought into the market through the dollar yesterday caused this market to rally back to the 1.2845, which was actually my upside target. Price pulled back slightly, and today, after spiking to that region once more, we've just melted back towards the lows at 1.2750. As you can see, we are hesitating at that level. However, we've now had, I guess you could say, a continuation in the trend with this lower low and this lower high. We are now back below the moving averages, which remain bearish. So we're looking for a break of this 1.2750 to head towards 1.2700 before potentially 1.2620. But for now, we are in a range. Don't forget that we're in a range because, well, as you can already see, price is pulling back from this 1.2750 region. If you do have any positions, I'd advise taking off some profits around this region and potentially leaving a small amount running as we remain bearish overall. So still within this range, we'd need a break below the 1.2750 to see the 1.2700 immediately before, as I say, 1.2620. But while we remain in this range, a rejection from here could see the 1.2845 met once more. So hope you all got that, guys. Thursday, have a great Friday. Watch out for Donald Trump's meeting with Xi Jinping after the G20. But other than that, trade safe. Have a great weekend, guys. See you next week.